Good morning, this is Dylan Jovine from Behind the Markets. Happy Thursday. Today is January 23rd. Today I want to talk about a big merger, a takeover that's been announced. Basically, that two big companies were merging in the mining industry. A lot of folks have written in to talk about it. And this is along the themes for us, 2025 being the year of the takeover, the year of takeovers, put another way. But basically what you have here is Rio Tinto and Glencore trying to merge to become the world's largest mining company in the world, which the combined company would have a value of about $150 billion, which is $25 billion more than the currently industry leader, BHP, which is at about $127 billion. But basically what's driving these takeovers, and why we think there's going to be massive opportunity in the mining section, why JP Morgan thinks there's going to be massive opportunity in the mining section, is copper. Basically, when you look at the demand for copper, specifically in energy transition, because that's still happening. I know Trump is going to drill, baby drill, and we're all good for that. We certainly own a lot of oil assets and gas and energy assets. But the transition is still going to happen. It'll happen, albeit at a slow rate in the U.S., but it's happening everywhere else, okay? So basically, everybody is looking for copper. Copper. And there are basically shortages. And no matter who you ask, it seems that the existing mines and projects coming online won't even meet the full copper demand that we expect in 2030. I mean, basically, they're not even close. They're going to meet maybe 70 or 80% of the copper demand. So basically, there's this massive demand for copper that is used in EVs, wind farms, solar mills, things on the roof, solar panels, all these kinds of things. And really, high-grade copper is not really that abundant. So if you're a mining company, you're a big mining company, you say to yourself, gosh, we know there's a tidal wave of demand coming for copper. What do? Do we try to go and create new copper mines? Or do we actually go and buy another company that has an existing copper mine and just sell the heck out of that? So a lot of these companies are actually going to go and buy other companies instead of starting a whole mine. I mean, you think about it, famously, mines are hard to get started. I mean, mines are very hard to get started. And even though you might have a situation where the Trump administration will okay a copper mine, these people know that if the next administration doesn't agree with that, they might bog that down, shut it down, put it in red tape. So there's a lot of regulatory uncertainty around this, which makes it very difficult for a business to say, we're going to spend $10 billion. I mean, it's almost foolish to do that if you don't know, if you don't have policies from both sides, bipartisan policies that offer guidance to these companies. It makes it very difficult for these companies to actually make big bets, multi-year bets, multi-president bets. So what they're saying to themselves is, look, let's just buy other companies. So we know the copper demand is surging. We know that it's hard to make mines, to start mines, regulatory, expensive, and all that. That equals combinations, takeovers, one miner buying another, just to meet the massive demand for copper that is coming over the next few years. So this is going to be one of the areas that we play very heavily in takeover targets. And I know we had a webinar about it Tuesday. So that is very important to us. With takeover targets, one of the things we do that's really cool with takeover targets is we make money one of two ways, basically. We make money by skim opportunities, by buying shares or recommending shares in a company after a deal has been announced. And we try to skim profits before the deal closes. And then, of course, we make money by picking stocks before a deal is announced. And we try to pick stocks in industries like this that are consolidating, industries where there is a strong economic incentive for company A to buy company B. So we've been very good at both of those styles of investing, which is why we have a 96% success rate since we launched in January 1st, 2020. And basically, this comes down to the fact that I've been doing this for, I've been investing professionally for 33 years. So I've been doing this for over 30 years. When you kind of I always say to my friends, if you can't be right 75, 80% of the time, if you can't have a batting average that is at least 75, 85% of the time after you've been doing something 30 years, you're probably doing the wrong thing. And thankfully, we do a little bit better than that. So I hope to see you. We have a lot of great opportunities in store right now. We have a NVIDIA takeover target, an Amazon takeover target, which we've been talking about, and we're going to soon have mining takeover targets, which I'm very excited about. Have a wonderful Thursday.